Here we are, it's pre-market, and it's 5:50 a.m. Pacific Standard Time, MMTs, and the date is 10/6/2011. And here we are having our third day beginning from the original 1075 low that we had anticipated, and what will be this secondary calendar yearly low, what will be that range. So if I'm 1075, I'm going to see today how far up I can go in the S&P. And what does that S&P trade look like? And the thing about it is, when we were trading off 1101 up to 1228 and or pulling back and holding 1126 and 1135 and then going back up to the 1204, but every reversal was there, as we had said. And now we're going into a calendar earnings. It's the last part of the year, and every sell down or every bear market raid, there is a bull raid that comes back, as you have learned so gracefully and correctly. And you have various systems and tools that are used for you, that you use to know when that trade is coming back in. Each individual equity on its own will have its own trading range pattern leading up to next week and the week after for the rest of this calendar month. So each individual name, like Apple, Google, and everything, has a trading pattern, a trading range that lead up into the earnings report. And there's nothing better than being long off at the bottom as the rest of the bulls remain on the sideline, and you're going to be able to cash in as they are just starting to get in the market. So the gap down today, Steve Jobs has passed on 10/5 of 2001. Great company, and we certainly will miss him. The other gap downs are just small little gap downs. The futures are somewhat elevated. The gap open up, on the other hand, you have Win that we cover. You have Google with the 230 gap. You got your Baidu again. You got your price line. Of course, all the ones that you were shorting all the way down and then reverse engineering the long side volatility is that the long side volatility is currently working at this very stage within the overall broader year-end 52-week bear market lows, and how the volatility works at those price levels, why they do, and why do they have certain type of price cycles. Well, today, anything that goes up on these gaps are going to pull back intraday, and they're going to slide that half bid bar. The higher that we go back up, as we went down, we're going to come back up into these levels, in these bull levels, where those bull resistance levels are going to be extremely challenged. The current sentiment is, I always buy stocks this time of year, irrespectively. Well, the problem is there's a kink in that. And the kink is as follows: contraction and growth. So, irrespectively, it's great to be on the bull upside when it's here, as we are, just like it's wonderful to go down in that bear side. So, as each level that we go higher, today is day 3 of the 52-week new 52-week low, and this is how the upside volatility works. I mean, you can't have red every day, but people do sit out on the sideline because they're in such fear that they can't make a transaction. Well, it's good to be buying and then selling, and it's good to be selling and buying back. It's good to be having all the various instruments. So that's the gap open list, okay? And once again, it is the first trading week of Red October that started out red. This month of October, you're going to see a lot of things, and we'll be covering every earnings, pre-market, and after hours as we do live, as we are doing here and now before the market opens up, and how to trade pre-market futures. And that as we go up into those levels for the first quick transactions, you'll look for the price spike, you'll look for the decline. You can take it in within that volatility of this first 20-minute opening bell. If you're good at it, you will be able to get that top end short. Leo did it yesterday when I was talking at this very same time on Amazon.com. And the thing is, Amazon.com is doing the same kind of gap again, up about $2, not quite that much, but it's still right here at about $1.01. Joy Globals and all of these ones that were beaten down in the major sell-offs, people are going to do a little bargain hunting, and that's why it's good to be long during the bargain hunting, because it provides that upside move. And when the sellers got out of the market 2 days ago, today is day 3 of this move. It's the beginning in pre-market futures of day 3. Day 3 will have either a consolidation from day 1 and 2 that would confirm that the bull is there, and that the confirmation and verifier, as it was in the first day and the second day yesterday, is that from the short gap opening bell, shorting the opening price up at the highs when it's there, you will pull back. But to verify day 3 being strong is that the pullback is not nearly as long as it was in day 1 and 2, meaning that the contraction and the pullback, bam, it's not as deep, it's not as volatile. You hit there on your teeny price action lines there, and you start to ascend back up immediately and run to go up into another higher delta resistance where that short would come into play. And then when they come back and they were like day 1 and day 2, they are popping right back to the right side and challenging their previous highs. We would be verifying that today on the opening bell, which is in 33 minutes now. So the pre-market tone, the jobless claims, you got the monthly jobless claim, or the job report coming out tomorrow morning. You've got European markets, once again, good bank, bad bank. Toxicity is going to have a band-aid and be put in a compartment. We're supposed to get recapitalization in those 17 countries across the pond. What does it look like in the growth factor in China? What are all of these things about that played the bigger picture in 2012, and how we also close out 2011? It's very clear that every rally up that we take, we must be the greatest short sellers again when that time comes, and it will. However, we are in day 3. We would be looking for an immediate reversal on the opening bell, which is in 32 minutes from now. If we get an immediate reversal, slide that bid right up at the top of that green bar, right when it makes that high, and there's that big green bar there, but all of a sudden, guess what happened? Within milliseconds, the high frequency volume machines bid down below that half bar, and there's another one that goes with it, and the verifier is 2 teeny reversals. There are such things, and it's a trading scenario. Doesn't mean that it happens, but we're prepared for it. And one of the scenarios on a gap open on day 3, they could come right in and sell right into it. If that's the case, it'll be verified in that really high bar count. Not only that, when it does come back, though, when it does contract, and it does find its support level there in your application, is you would turn back up to the right, but it wouldn't be like the other days you go back up and break the highs. No, it would be diminishing. A 0 IR to 35, back down to 5 IR. That would verify that move. The other move, on the other hand, though, is that the bull feels that the train may have left the station, and do they really want to get ahead of tomorrow morning's numbers? Okay, and once again, we have featured Priceline, because Priceline does a wonderful thing. 447 by 454 is the ask. Well, naturally, I'm going to put a short out right below the ask because that's a big gap between that buyer and seller a minute ago. Now they just dropped it down to 451.99. You can see the volatility in pre-market gaps using Priceline as a major primary gauge of forward-looking daily volatility, price volatility, MMTs. And that on the opening bells, because this is all done before the fact, not after the fact. The higher that they go up there, you get that short trade, but you're going to be looking for all of these characteristics. Bam, I slide below the half bar, I never look back, I never see it, I can come back up, I hit resistance, I got another 2 teeny drop. So if it is going to be where on the third day you're going to have lots of red bars that drop 2 teenies with little counter rallies that come up but then drop again, and your red bars are growing much longer in distance than the topping ascending pattern where the buyer is there but the buyer weakens considerably and down we go. This is the pre-market. This is Nasdaq pre-market opening bell. The NYSE, on the other hand, it's doing quite well in its own right. We will take a look at that next. Here is your gap sequences right now. Okay? And how do I short that and turn that into a profit? Then it drops back down to support. I buy the cover and then go long, and I get 2 debits within the overall market maker transaction. Good luck, MMTs. That's what you're going to get today.